Welcome to AE 101 Financial Accounting and Reporting. This is your instructor, Ms. Maria Angelica C. Balatucan. And for this lesson, we will be starting with the Module 1, which is the accounting cycle for service operations. If you can recall, this topic is discussed in the Senior High School Fundamentals of Accounting, Business and Management. And what would make this course differ from your senior high school course, we will elaborate more on the preparations of the adjusting entries and the worksheet and the rest of the accounting cycle. So for lesson 1, we're going to review the basics on journal entries, the accounts, and the trial balance. That is for week 1. And so the topics that we'll be discussing for this lesson is, of course, the accounting cycle and specifically steps 1 to 4. Okay, so the specific learning outcome would be perform the steps in accounting cycle from identifying accountable transactions to trial balance preparation. I bet you already know how to do that, but we will review so that we will be prepared for the next steps and next level of analysis. Okay, so as you all know, the accounting cycle involves 10 steps. We start from identifying the transactions, journalizing them, then post them to ledgers, then prepare the trial balance. Now we prepare the adjusting entries, and then we can now make the adjusted trial balance that will help us prepare the financial statements. And of course, we need to close the entries wherein what is left in the trial balance are the real accounts, and that's the time we can now prepare the post-closing trial balance. And of course, at the beginning of the next accounting period, we will journalize our reversing entries, but you know this one is optional. Okay, so step 1, identifying and analyzing economic transactions and events. So we have here exercise 1, if you can remember our lesson before. So you need to identify and analyze if the transactions are accounting or accountable or recordable transactions. If these are not recordable, then they cannot result to the preparation of preparation of journal entries. So they don't affect any of the accounts in the financial statements. Okay, let's try. Number 1 is investment of cash in the business, an accounting transaction. Okay, that is an accounting transaction. How about payment of rent? Is payment of rent an accounting transaction? Yes, that's an accounting transaction. How about purchase of land for cash? Is that an accounting transaction? Yes, that's right. That's correct. That is an accounting transaction. How about sold merchandise on account? Is that an accounting transaction? That's correct. That's an accounting transaction. How about hiring of employees? Is that an accounting transaction? Okay, are you sure? So the answer is no. Okay, so it does not affect any of the account balance. How about the payment of salaries of the employees? Okay, that's an accounting transaction. This time we can debit the salaries and credit the cash. How about purchase of supplies on credit? Right, that is an accounting transaction. How about receive payment in advance from a customer? Yes, that's an accounting transaction. How about perform services on account? Okay, that is an accounting transaction. And billed clients for services rendered? Okay, that is also an accounting transaction. So out of these 10 items, it's only the hiring of employees which is not an accounting transaction. Very well. Remember that when an event brings change to account balances, it is classified as transaction and recorded in the books. Okay, so this recording step is what we do in step number 2. Journalizing accountable transactions. So these items here that we journalize are only those which qualifies as an accountable or an accounting transaction. So how do we prepare a journal entry? Of course, we need to do these steps. Okay, we have to write the date and the debit and the credit. Okay, so when we debited an account title, of course we have to debit also the amount under the debit column. And then of course we credit the account title. We also need to credit the amount under the credit column. And we have several columns that can be found. Of course, these columns represents something. Okay, so this first column represents the millions, then next would be the hundred, thousands, then 10,000s. You have the thousands, hundreds, tens, ones, and of course the centavos. Okay, and of course we have to write the description or explanation of the transaction. What is the purpose of this one? In order to remind us what transpired during that day. Of course, in reality, we don't have the list of transactions unlike what we do in our senior high school course, right, wherein all the transactions are listed as 1, 2, 3, 4 or ABCD or by date, and you have to prepare the journal entries. It's not like that in real life. The transactions just happens, and you need to put a description to remind you what happened during that day, from whom or to whom is something is paid, just like that. Okay, and then we have 2 ways on how to prepare the journal entries. It could be a simple entry or a compound journal entry. And what is the difference between the two? Simple entry is simple in the sense that it only has 1 debit and 1 credit. Okay, just like this one, debit to equipment and credit to accounts payable. Only 1 debit and 1 credit. Another one, debit accounts payable, credit cash. But if it is a compound entry, it means that it's either the debit side has more items compared to the credit side, or the credit side has more items than the debit side. So the simple definition for that is that there's more than 1 debit or more than 1 credit. Or, so meaning it's not necessary that there should be 2 debits and 2 debits as well. It's not like that. So what you only need is one side has more, or 2 credits or 2 debits than the other side. Okay, so either of these 2 preparations are acceptable. This only combines several transactions into one set of journal entries. Okay, then step 3, you post the journal entries to the ledgers or the T accounts. Okay, ledger is the book actually, and the T accounts is a simplified version of the ledger. Of course, we cannot make ledgers or book of accounts every time when we prepare journal entries. So the ledger is it has more specifications compared to the T accounts, but the rationale for preparing the T accounts and the ledgers is the same. It summarizes from the journals to the ledgers or T accounts. It combines the common accounts that are written in the journals. For example, if you keep on debiting cash, so all of the cash that are debited are also combined into one T account. You classify them into one T account or ledger account. Okay, it is called as T account because it looks like a T. Actually, the ledger also looks like this, but it has more specification, and it's like the journal notebook, which has several columns. Okay, but this one is a simplified one to assist us in the classification of accounts. So the T account is a device used to record the increases and decreases in a specific account. So you debit an item and then you credit an item, then you write the date. So how do you transfer? For example, on February 2, Ana Maria invested 250,000 cash in her salon business named AM Beautiful Salon and Spa. Okay, so from the journal entries, you debited cash and credited A Maria capital. You transfer the cash of 250,000 to the T accounts or the ledger of cash. So that would be placed on the debit side. For the credit, 250,000, you're going to place that on the credit side as well of A Maria capital. Okay, another example. On February 3, AM Beautiful Salon and Spa bought supplies for 15,000 cash. So the debit to supplies would go to the debit side of the supplies T account, and the cash would be credited on the credit side of the T account of cash. Okay, and you have here, so there are several journal entries, and you would also need several T accounts. So if there are so many there are so many accounts that are used, so it follows that there are so many T accounts also. Okay, step 4, preparing the unadjusted trial balance. It is unadjusted because we're basing this trial balance from the amounts here in the T accounts, and it's not a guarantee that when we prepare the trial balance it's already correct. That's why it's unadjusted. Okay, so how do we transfer that? For example, here your cash has debits and credits. You get the total of each side. So for example, you have 263,200 and 32,000. You get the difference between the two, that is 231,200, and we place it on the debit side because the debit side here, the total is greater than the credit side. Okay, and supplies, since you have 15 and 4, the difference is 11,000, so therefore you place it under the debit side. Same with salon equipment, there's no credit, so it follows it is 26,000 debit. Accounts payable, 5,000 and 14,000, difference is 9,000, since credit side is greater, so that is a credit balance of 9,000, and so on. After you get the balances, you have to transfer that to the trial balance. This is the unadjusted trial balance. So you have to write the accounts, you have to follow the liquidity of the accounts. You start with assets, and then the liabilities will follow, and then you have the equity, and then the income statement accounts. Okay, so this is a simplified version. It's not actually the real setting if we talk about the account titles. These are just very few. Okay, so since we have 231,200 debit balance, you have to transfer that under the debit column. That's why it's important you write debit balance, credit, so that you will not get confused when you transfer it here. Okay, and then supplies, that is debit balance. Okay, transfer it here, and so on. After you were able to transfer these to the trial balance, you get the total, and it should be balanced because it is a trial balance. Okay, if this is not balanced, so meaning there are items that you have missed to include. It can be that there is a certain journal entry you failed to post, or you posted it in the wrong side. That might be a reason. Okay, so that's the end of lesson 1. Okay, so should there be any questions, feel free to inquire your teacher, and I have also left an activity for you to do to check your understanding. Okay, so see you in our next class.